We've got a very eventful week between the FOMC meeting and a bunch of economic data. But I'll tell you, if you're a Bitcoin holder, you're going to want to pay attention because we are in a spot right now where Bitcoin is flipped below a level of resistance. And there's something else here that's really important to take note of and watch because this is not the best news for Bitcoin. And with that, every single day in crypto is an adventure. And for that reason, hit the subscribe button now because I have a new show pretty much every day unless I'm sick or on vacation. But even then, I tend to do shows anyway. So that being said, we're going to get right into it because Bitcoin is in a very precarious position. If you look at the charts right here, you'll notice that this $95,000 mark, we took 8 or 9 days. It was a strong level of resistance. We took 8 or 9 days to get above that level, and it sat there for a day or two, and then we had 3 red candles in a row coming on the downside. And so if you look at this last one, now this $95,000 mark has flipped into a strong level of resistance yet again. And that's not the precarious part. The precarious part is where the MACD sits, the moving average convergence divergence zone. We're at a cross level of the MACD, and we haven't been at this upper level since, we haven't had a cross like this since January 28th. That was the beginning of the downward slope. Now, obviously, there was still a lot of positive news that came down, but the indicators, the indicators themselves didn't push Bitcoin down, but Bitcoin got pushed down to about a 30% drop. And so we're back here sitting at this level again, where we're starting to see the beginning of this crossover. Now, that doesn't mean to say that something could happen to flip Bitcoin back the other way. And this is not financial advice. I'm not your financial advisor. But that being said, we have a lot of room to run to the downside. Now, this could present lots of opportunities. But right now, this is something that we're severely concerned with and watching. Now, it doesn't have to be another downturn. It could be the flip that goes up, but we're going to need a catalyst. And this week, the FOMC meeting, the Federal Open Market Committee meeting, where the federal governor or the Federal Reserve Chair, Jerome Powell, and the governors, they meet to talk about the interest rate. And while a lot of people are saying they're going to drop the rate, I don't think they will. And I said this yesterday. It does not look like there's a strong indication that they're going to drop the rate. Now, we've been surprised before. We could be surprised again, but a surprise would just be that. It would be a surprise and would certainly flip markets quickly because the addition of liquidity would do one of two things. It will scare people to say there's something wrong that we don't really know about because the economic indicators don't really all show that there's a major problem right now. I do think the cost of money needs to come down to relieve on prices. But that being said, that the Federal Open Market Committee probably won't do anything for the rates. Now, what they can do is ease up on quantitative tightening. And quantitative tightening is the sale of mortgage-backed securities and treasury bills. And when you sell something, you lower the price, which raises the effective yield on the bond. So it raises the rates on those instruments. And it removes liquidity versus puts liquidity into the marketplace. I do believe we will hear more conversations on that. We're going to hear a lot of conversations on the tariffs. And if we look at yesterday, I made mention that there was a lot of room to knock out some longs yesterday. And I said that the $93,000, $94,000 mark was very possible. Now they flipped. Now the shorts, there's a lot of short leverage. I mean, gosh, people. There's a lot of short leverage on right now. I mean, the short term 1 day, not as much. But if you look at the 7 day, there's a lot of short leverage up in the upper levels. So my personal opinion, and this is nothing but my opinion, don't act upon it, is that we're going to retest probably a little bit lower into the 91, 92 range. And then we could potentially move up higher. We just need a catalyst. And that catalyst could be the end of the tariffs. It could be easing up on quantitative tightening. It could be saying that they're going to sell mortgage-backed securities and buy T-bills, where you're tightening in one area and easing on the other. Crazy. But these are catalysts. You need some kind of event that will help break out from the norm. And if you look at where crypto is right now, I mean, it is not the most positive. This is the day. This is the week. You know, most of the bigger coins are down significantly, 10, 11% on average. You know, you look at the month, still not a bad month. Fartcoin just crushing it. Pengu, Virtual, 223%. Sui, 55%. You know, Jasmy up 50%. these coin hype 72%, Bitcoin 13%. So not a bad last month, but the 3 months still looks pretty negative. So we look back to say the Fed probably isn't going to raise the rates. Now, what can you do in this market? What can you do? So depending on what happens on Wednesday, you could certainly I might put on a trade where I'm going to do two different trades. I'm going to have a long and a short. And the long, I'll have a stop loss for each one of them, and one of them will prevail. Now, this works when you have extreme volatility. If you trade within a narrow range, you lose money on both trades because it didn't go up enough to really, if it goes up enough, it'll knock out your short, but it has to go up enough to cover the losses. So if it just goes like this, you have a little bouncy, you don't have bigger swings, you're going to lose. So I'll talk more about that in tomorrow's show. But right now, just be very conscious, be very, very careful that the markets are going to be very volatile because no one really knows what's going to happen on Wednesday's meeting at 2 p.m. Eastern Standard Time when Fed Chair Jerome Powell announces the results, whether they're going to raise rates, lower the rates, and any other words he uses will move markets very possibly extremely, depending on what they say. If he says nothing of really extreme value, markets aren't going to move extremely. But that being said, look, just be careful. If you make trades, most likely they're going to be gambles. You don't win gambling. You don't win long-term gambling. I mean, very, very, very few people do. So just be careful. Be cognizant that we're right in a range where, the MACD is looking very bearish right now. And a catalyst could send that to the downside, which would present more opportunity for a lot of people because I think long-term, I'm still very, very bullish on Bitcoin. But this will have a big impact on the market if the chair says something outside of what's expected. That being said, that's pretty much all I got. If you have any questions, comments, concerns, put them down below. And with that, I'll see you next time.